What's good, YouTube? It's your boy Marv Velos, but you can call me Marv for short. If you're a returning subscriber, I want to appreciate you. I want to thank you for coming back to watch this video. If you're new here, if you're seeing my face for the first time, my name is Marv Velos, but you can call me Marv for short too. So essentially, what I do here is just document my life as a forex trader or financial market trader. Essentially, just sometimes do vlogs, just here and there, and kind of give advice to beginners and just my own trading journey as well. So you can learn one or two from what I see on my channel. So, diving to the purpose of today's video, really. Today's video is just essentially beginner's advice. So, this beginner's advice is essentially what I would do if I'm to start all over or start my trading journey all over again. So, this is what I would do differently. And I want you guys to stick to the end because I think I have some gems I have to share, especially if you're a beginner's trader. So, now personally, I passed out of this stage, but I'm just sharing this to my beginners out there who kind of coming into the forex space and they are lost and don't know what to do. So what we're going to be starting with is so I actually divided it into two categories exactly. So I divided it into two categories so that it will be easier to explain. You understand? So the first one is I will tell you or I'll advise you rather to start with demo, right? So I want you to start with demo 2 weeks to 1 month or 2 months, 2 months max. Don't spend too much time on demo. Demo is not the real thing. Demo is a fake account. It's not like a fake account. It's not real. You don't experience real trading using them. So now personally, I used them for a very long time, even more than 2 months. Just I was using demo where I was like, hoping for strategy using demo. There was no real structure behind it. So I didn't understand what it means to feel what trading really is. So the purpose or the goal for you when you start using them, the purpose is essentially one, you need to understand the fundamentals of how to use MT5, like how to use MT5, how to use trading view, how to make analysis, how to execute analysis. So all of those things you are learning, you're beginner, right? So you have to make sure you understand the environment or the ecosystem of trading. Now people use MT4, people use MT5, essentially all or most traders use trading view for their analysis. So these are the things you just want to get yourself familiar with during these 2 weeks to 2 months max using them. Secondly, you want to understand the strategy you are using. So if you are using a particular strategy, you want to understand how it plays out in the market. So you go ahead and you use them. Easy. Lastly, you just want to understand execution, what execution feels like. Now, a disclaimer, please do not spend too much time on them. Now it can get addictive to the extent because you're not really risking real money. You don't understand what trading really takes. You take a loss, but you're not feeling the loss. You take a loss on a demo account, you don't feel it in your pocket because it's not your real money, it's not your money. You cannot grow using that strategy. As a matter of fact, you're going to stay stuck. So, like I said, 2 weeks, 2 months max. Even the 2 months is just because I'm giving grace. It should normally be 2 months. 2 weeks to 1 month. But that 2 months, just like I'm giving you like a grace, but 2 months, please. If you've not gotten a hang of it, just keep trading. But 2 months, please leave demo accounts. Now, the next point I would say is you need to understand the kind of trader you are. So there are different types of trader when in this industry or when it comes to trading, right? There's a scalper, there's a trader, there's a swing trader, there's a intraday or day trader, and there's a position trader. So a lot of people fall in these categories, and some traders will call themselves intraday or swing trader, and most traders actually fall between day trader, which is also intraday, and swing traders. For the position and the scalpers, they are kind of extreme. From one end, they are outliers basically. So who is a scalper? Who is a day trader? Who is a swing trader? And who is a position trader? For a scalper, right? So who is scalper is essentially just somebody who goes and look for quick money in the market or quick profits in the market. Apparently, if you really do your research, you see that the scalpers who make money, or according to the statistics, not a lot of scalpers are actually profitable at the end of the day. So not a lot of people who say their scalpers are profitable. However, people have strategy surrounding scalping. Scalping is just for a moment when you're trying to recover, but for profitable and long-term trading, scalping is not advised. Now, a scalper usually use what time frame? Or they usually use 1 minute, 5 minutes, sometimes 15 minutes time frame to just look for what he can actually get from the market in a day. So he's a scalper. He just quickly he enters the market, just quite smart that he enter the market and get out of the market. So usually they will spend what now max maybe 10 minutes, 5 minutes in the market and they're out. So I'm looking for short and quick gains. Now, who is a day trader or is an intraday trader? A day trader is now what most traders are. So they trade every day, but they are not scalpers. They understand, they have a strategy, they have what they are looking for. And intraday or day traders, they don't have to trade every day until they see their status. People who are profitable, this is what they follow. They don't have to trade every day. They don't have to, always be in the market. I mean, you can always be in the market, but you don't have to trade because you see your setup. So intraday traders are the people who have a strategy. They go to the market, they look for that their strategy, they look for that their setup, and once they see it, they take it. Their time frame is usually within 1 hour, 2 hours. Then they come down. Their entry time frame is usually 15 minutes, 5 minutes, and 30 minutes sometimes. So it just depends on the trader. All of this is what classifies an intraday trader, but they always go from day to day, and most of them, if they don't see that setup for a disciplined trader, if they don't see that setup, they don't have to trade. But they have what they're looking for in the market. They come during the day to see what they can find from the market. So they trade the New York session, they trade the London session as well. That's what a day trader is. Now a scalper can trade all of these sessions, but he's always looking for quick gains. His time frame on the minutes he stays in the market is probably like I said earlier, 10 minutes, 15 minutes, and he's done with scalping, like he's just out. But somebody who is a day trader can use the same time, but he trades less amount of trades, unlike a scalper who takes a lot of trades. So now, who is a swing trader? A swing trader right now is basically somebody who can hold positions in particular trade for days. You see a setup, you take it, and you're really comfortable holding trades over a period of 3 days, 4 days, even sometimes a week. Like you're comfortable doing that. Now you can classify yourself a swing trader. A swing trader mostly will just hold his trades. He can hold his trade a day, 2 days, 3 days. He's comfortable with it. He doesn't really mind. That's who a swing trader is. Finally, position trader. Or before we go to a position trader, somebody who is a swing trader as well usually use the 4-hour or the daily time frame to get the kind of bias or structure of the market or where the market is heading. Then you go down to lower time frames such as the 1 hour, the 2 hours, or sometimes the 40 minutes, 45 minutes, just to get a hang of what the market is actually doing or saying. That's where you also take entries on the 1 hour. That's who a swing trader is. Now moving to the profitable trader. A profitable trader a position trader. A position trader, well, that's the extreme of all the things, because a position trader doesn't even look at daily time frame. So what it goes to the weekly, it goes to the monthly, and probably takes his entry on the daily. That's who a position trader can hold. A position trader holds trades over a period of months. In a year, a position trader can take trades just 3 times in a year. Sometimes can be 10 times in a year. So a position trader essentially doesn't have time to go or have any business or the noise that has to do with the 4 hour, with the 2 hour, with the 1 hour, with the 15 minutes. It's just concentrated on the monthly time frame, the weekly time frame, the daily time frame, maybe double around the 4 hour. But essentially they just take position trades, and most of these position size traders, they have a lot of money to trade. I will actually say maybe they know the market sometimes, but these position traders, they know what they are doing, they know what they want to see, and they hold the trade for over years and stuff. So you need to understand the trader. But most retail traders have no business being position traders. If you're a position trader, you probably should work in a hedge fund or something. So, or it's an institutional trader. But most retail traders are usually scalpers, day traders, or swing traders. But mostly they are within day traders and swing traders. So day traders and swing traders, that's what most retail traders fall, or that's the brackets they fall into. So now, the reason I said you should understand the kind of trader you are is for different reasons. First, when I was starting personally, I was told that I should just focus on one pair. Do you understand? You should focus on one pair. You shouldn't go through too many pairs and that kind of stuff. And okay, that's what I did for a very long time, which encumbered my growth. I have to tell you, it encumbered my growth. It hindered my growth like for a really long time, maybe a period of 1 year, 2 years. Still, and then what you usually hear is the major currencies such as GU, EU, those kind of pairs, GU, EU essentially, and that's what I was focusing on. So I did the strategy I'm using now wasn't what I started with. Of course, I did demand and supply, I did Wyckoff, I mean, what did I not do? New York session, CRT, ICT. There's a lot of strategies that I did before I finally started with this. Now, when I was trading all those other strategies when I started with, or I started out with, I was being told to just focus on one pair. That's what we hear over and over again. So start with one pair, start with a couple of pair, EU, GU, which I was doing for a very long time. But I wasn't essentially seeing the results or the possibility with those strategies and focusing on just two pairs. Mind you, I'm seeing other traders trading multiple pairs, seeing how they're effective with other pairs. But since I'm following a particular person, I just have to stick to what he's saying for. But now I have to tell you, within yourself, you will know when okay, well, this is not aligned, and you know where to switch. That's what happened to me. Although my own happened to me late because I was just dogged in the sense that I was just sticking to what my person was saying or who I was learning from at that point was saying. It was a huge delay. It caused a major delay in my growth or in my journey as a trader, which is what I'm coming to tell you now. So then you say focus, limit your pairs. I did that for a very long time, but it wasn't working for me. Now, hopping within strategies, when I finally came across the strategy I use now, which is the dark strategy, I was sticking with the mindset of focusing on just like a limited pairs, which is GU and EU. GU and EU was majorly what I was focusing on, right? GU, EU, I don't really see me adding another pair. I can't even think of any other pair. Because mostly EU and GU, there's maybe gold. So I was just doing myself. Then when I now realized that dark strategy, if you limit yourself to a pair or two, you turn a position trader out because you will not in a month in a pair or in GU or EU self, you might not even see shit, you not see shit buying, you not see anything. So that's why I understood that when I was doing this for a while, I was like, bro, if I stick to EU and GU with this dark strategy, there's no way I'm becoming profitable. I might as well just not a position trader. That's when my eye opened and I started to look through other pairs. Even when I was looking through other pairs safe, because when I was learning dark strategy, like I said, like I was seeing most of these setups or typical setup on the higher time frame. When I go to lower time frame, it was as if I'm seeing them. Yeah, I'm seeing it a lot. I didn't know how to use it, but the higher time frame, I was seeing it less. So when I was starting with the higher time frame, before I gradually started after so much backtesting on hours behind the screen, I was beginning to understand how to use it on the lower time frames. And by lower time frame, I mean the 1 hour, the 2 hour. Higher time frame, I meant daily 4 hours or so. But I had to navigate it myself. So if I had stuck to EU and GU for that period of time, or I didn't use my sense to change, I would probably still be at the back. But when I understood that, that even doesn't even trade only EU and GU, as a matter of fact, he rarely even trades them. That's when I came to realize, I've been on the slow thing. So that's how the thing is really. That's why I say you should understand the type of trader you are, understand the strategy. If your strategy limits you or allows you to focus on a couple of pairs, maybe you should. Maybe you should call yourself king of a particular pair. But if your strategy doesn't allow you to focus on a couple of pairs, please don't even think about it. Just explore other pairs, because there's a lot of pairs to make money from. Now I have to tell you this on the other side, that there are sometimes where if you are trading multiple pairs, you tend to forget some setups on some pairs. But I like to say that if you forget setups on certain pairs, that's your fault. It's not anybody's fault, because once you particularly go through if you go through a couple of pairs, you should write them down and say, I saw a setup on this pair. And during the week, you go back to where you wrote them down, you go and check those pairs to see how the market is building up towards the strategy. So a lot of people say, they get overwhelmed trading multiple pairs and all of that. That's what I'm saying. You need to understand the kind of trader you are. If you get overwhelmed trading multiple pairs, maybe you should go ahead and look for the strategy that works with like just a limited pair, 2 or 3 pairs. But if you're comfortable, going through a lot of pairs, backtesting a lot of pairs, then maybe you should, chill out and see what that other pairs have to give to you. Now, personally, after I started using that strategy, most of the time I forget EU and GU. Can you imagine that? I started out looking at GUE, understanding their patterns, everything. But now that I'm, quite experienced in the game, I understand that EU and G set doesn't even give me a lot of money like other pairs do. As a matter of fact, the kind of pairs the pairs I'm enjoying right now, the currency pairs I enjoy right now is JPY, CHF, and NZD. But you see JPY, oh my god, especially CHF JPY, man, oh my god, that pair is just so amazing. At least it's performing and it's doing well now. Down the line, man, those screws and begin to spiral. But the JPY pairs, the CHF pairs, and indices as well. I love indices, especially NAS 100, German 30. All of these pairs are amazing pairs. So by the time you grow, you begin to understand your situation with trading. You begin to understand where you lie when it comes to trading. And USD JPY too, amazing pair. But USD CHF, that pair, they catch that pair sometimes. If you miss your entry, to just be good. When you're a trader, you know what I'm talking about. Especially when you use the kind of strategy I use. USD CHF just used to, like, you should just go. Once it has left you, or you have your missed entry, it's likely just going to be going. And once it has gone so far, you have to invalidate your trade, because at that point, price has moved too far away from your entry. So these are just the couple of things I had to share with you guys who are beginners. So watch this video again. If you don't understand what I said in the first watch, you should probably download it, save it, and watch it again. And if you have a friend, if you're watching this and you have a friend who is also a beginner, you can go ahead and share this video to them. I hope I've been able to, offer some kind of value to you guys who are watching, offer some insights to you guys who are watching. So this is just my own piece of advice to you guys who are starting out as beginners. This can just, cause some kind of hurdles and setbacks that it cost me. So that's why I'm sharing them with you, so you can actually fast track your journey as a Forex trader. Because it's really important to take note of these things, because somebody can spend 2 years, 3 years trying to become a profitable trader, but somebody who has the right information can go ahead and make it in a year or two. Do you understand? So make sure you seek the right information. Always follow the right mentors as well. Make sure your Dulu has something to prove that he's profitable. Don't follow people blindly, please. Alright. That'll be all for today. I'll catch you in the next one. Peace.